Hey folks, Andrew Packer here. Welcome to Trading Tips. Now in the past few videos, we've covered the basics on what various options are and what they do, and we've looked at a few strategies with some real-world examples behind them. So now, it's time to take things to the next step. Today, we're going to look at a way to find investment opportunities using the options market. And we'll look at what some institutional investors are doing in the options market right now, and how we can use this knowledge to make profits alongside them as well. That's because, just like the stock market, any activity that you get in the options market can tell us exactly where the money is flowing to. So most stock investors know that they can follow a successful investor like Warren Buffett or Carl Icahn into a stock trade that they make. And that trade has to be made within days because these purchases that these professional investors make usually require SEC disclosure. Now, there's no SEC disclosure in the options market, but investors can still find investment ideas in pretty much the same day just by looking for options trades that have what's known as unusual activity. So what do I mean by unusual activity? I'm pretty much talking about a situation where an option trades on a multiple of its average daily volume. Some options may trade just a few dozen times a day, some may trade a few hundred. A highly traded stock like Apple or Bank of America, Wells Fargo may see thousands of trades a day. But if something that's trading a few dozen times a day suddenly goes to a few hundred or a few thousand, that's a pretty good sign of major investor activity. And if large blocks of options start trading like that, it typically indicates that a major institution like a hedge fund is making that trade. It's what investors on Wall Street call the, quote, smart money. Now, for those of us small investors, which Wall Street calls the dumb money, we might trade anywhere from maybe 1 to 10 options at a time. So it's not really small-time investors that are causing this huge surge in activity. A large fund needs to trade hundreds of options contracts relative to the amount of capital that they have to put into the trade. So if there's more than one major day of activity, there's another sign that this is not just a one-time thing. It's a position that's being built up over time and is likely to pay off over a longer period of time. So if you start to see any of these unusual things happen in the market and with an option, it's a good sign that there's major money at work. Now, there are plenty of ways to research this. All you have to do is, Google unusual options activity, and you can find plenty of websites that will aggregate some of the data and just show you just the raw data of where this unusual activity is happening, where the volume is surging, what these contracts specifically are, what the strike date is, what the price is. So with all of those factors in mind, let's just look at some real-world examples that are going on right now for unusual options activity. Now, the number one that I'm looking at right now, just based on options activity from this week alone, is in shares of Advanced Micro Devices, ticker AMD. Now, this is a stock that's trading around $21 a share, but it's getting some options activity in the $24.50 range for calls. So that tells us that the smart money thinks that there's going to be a nice little bounce in shares in the next few months of over 10%. Going forward from here. Now, just to give you an example, the volume on this the other day was about 4,100 contracts on a position that only had about 200 contracts open. And that gives us about a 20-to-1 ratio of volume relative to open interest. That's a very good indicator that there's a lot of money moving into the trade. Anything more than really 4 or 5 to 1 is going to be a sign of smart money that's moving into the trade. Now, of course, as with any smart money, whether it's a hedge fund, whether it's like an insurance company or other bank or investment bank, it's not just going to be on the long side as well. They're also going to be looking at short-term hedges. They're going to be thinking, I have this position I want to hedge specifically by buying puts against something else. So you'll also see just a lot of kind of short-term, put option opportunities that might tell you, hey, this stock is likely to go down, and you might be able to make some pretty good money buying the put option instead. So the second very unusual activity that we've been seeing lately is in General Electric, ticker GE. It's a business that really doesn't need too much of an introduction, but from an investment standpoint, it's just been a terrible trade this year. They got delisted from the Dow Jones Industrial Average. They were one of the last original 30 Dow companies to do so. Shares are down over 50% a year. And as we get into the end of the year, chances are people who own shares might just want to sell out, take their tax loss, move on. They might want to buy back in January and sort of lower their cost basis going forward, but it seems as though the smart money is seeing some more downside going into the end of the year on this one. How bad is it? The option that is getting a lot of interest this week is in the 650 range, which is over $1 lower from about the 770 or so that shares trade at today. Now, the open interest on this one was only 117 contracts, but the volume was over 30,000 trades. I mean, that's just about a 260 volume to open interest ratio, which just tells us that, you know, there's a huge amount of pessimism that's been in the stock, and the worst isn't over yet. I know this is a very widely held name for a lot of people. I also know that a lot of individual investors have been thinking, hey, shares of GE have been sliding. This is a good chance to sort of buy that dip, get a value play. But, you know, the smart money is telling us they still expect shares of GE to kind of go down in the coming weeks. We're not really seeing any unusual activity on the call side on GE shares yet. So just using this as an indicator, this would be a sign to say, hey, you can get in on the short side by buying put options on GE now, or if you own shares, you might just want to get out and, you know, maybe look at a lower price point to get back in the next few weeks. Now, again, it's not all optimism and pessimism. I mean, there's just a lot of activity going on. And in the options market, you know, for every, you know, buyer, there's a seller. So there might be some people who are just, you know, they're hedging a position they have, but there are other people who are, you know, seriously betting on big moves in these stocks. So here's another third trade. It's another one on the long side. You know, I'm optimistic on the stock market generally going into the end of the year, and I think that there's a big opportunity in, you know, buying some call options on some of the stocks that have been beaten down in the past few weeks. And you know, one that I like is Home Depot, ticker HD. It's a pretty pricey stock. It trades about $170 a share, so it makes a lot more sense, you know, in my mind, just to buy call options rather than buy shares here. And we're also seeing that with the unusual activity that's been going on in the market this week. For example, there are 172.50 calls on Home Depot that had an open interest rate of 125 and then had over 1,500 contracts traded, you know, earlier in the week. So that just tells us that investors are seeing a little bit of upside potential in Home Depot shares going into the end of the year. So looking at some 175 calls, even going out, you know, a little further, a few months, looks like there's an opportunity there to benefit from a gradually rising market into the end of the year, the stock market recovering from its, you know, kind of October to mid-November sell-off that we've had, and the like. So at the end of the day, unusual options activity can sort of tell you, you know, what the smart money's doing. And we can see that, you know, it's not all bullish, but it's also not all bearish. It really comes down to, you know, these individual companies, who they are, you know, what they do, how badly shares have been beaten down, where they're likely to go over the next few months. So a company like Home Depot, I can easily see, you know, investors being bullish on it at the end of the year. Same thing with advanced micro devices, not less so with GE. And, you know, that's just what this market is telling us. So by following these, you know, smart investors, quote unquote, and just sort of following along with what they do, we have an opportunity to profit as well. You don't necessarily need to use the exact same options that they use, and a lot of times the so-called smart money just has a lot of money to put to work, and they'll, you know, buy or sell puts or calls with just a few days left on them. You know, they'll make a, you know, a nickel or a dime a trade, but they'll do that on like 3,000 or 4,000 contracts, which doesn't sound like a lot, but if you're making an extra, you know, $15,000, $20,000 a week as a fund doing that, that's really kind of a bread and butter activity. So unusual activity, it gives us a lot of clues as to where the smart money's going, and you can profit alongside that as well, but you don't have to follow it, you know, exactly. You can give yourself a little more wiggle room on the trades and give yourself the chance to make, you know, some bigger profits. You know, on any of these call options, for example, you could take a higher strike price because the smart money expects them to go up, and if you do too, you can get a better percentage return on your options, even if those options don't end up going in the money. So that's some of the unusual activity that's going on in the markets right now. So there you have it. 3 different potential trades just from looking at unusual options activity. And remember, this is something that you can look for yourself on a regular basis on a finance site like Yahoo or Google Finance. But you can also use specialty finance sites that have this data as well. However, this data is in its raw form and it covers a lot. It's like looking at spreadsheets all day, and that's why it's critical to have a way to pare things down like we did here today, just looking at, you know, the whole list of unusual activity for one day and finding 3 ideas. One way to do that is to use a service like the Options Insider program. It's focused on trading options using an unusual options activity strategy in more detail than what we've looked at today. So to sign up for the service, simply sign up at optionsinsider.com. That'll wrap things up for this week. Thanks for joining us at Trading Tips. I'm Andrew Packer, wishing you good trading and good financial health.